We're excited to have Andrew Lemoine back with us. A round of applause for Andrew and his panel this afternoon. Take it away.
Thank you, guys. Joined by Tony El Haibi from My Car, Mark McMullen from Shop Wilson's, Jessie from Wilson's, and Andy from Wilson's. When they found out how big of a personality Tony has, they brought the whole team up. Look, this is going to be a very, I just want to have a conversation with you guys. We've got the honor to have some of the most successful used car dealers in our province and arguably probably in the country on the stage here. And there's been a lot of change in the landscape. There's been a lot of change in the way that cars are being bought, cars are being sold, with a lot of those dynamics that we're going to get into. And one that I want to start with is negative equity. We're seeing more negative equity today than we ever have. I mean, those COVID sales of yesterday are the trades of today. I think that's the reality that we're facing. Someone made a comment to me earlier saying that we're kind of our own worst enemies sometimes as dealers, and that I would agree. And I'll start with Tony. Tony, you know, when someone shows up right now to the lot with tons of negative equity, like, what does your team do to keep that deal moving?
Well, I mean, when they show up with negative, first of all, I mean, it's how you handle the customer when they walk into the dealership. You have to determine that real quick. And in my opinion, that discussion should be really held with the F&I department. The F&I department is going to determine via their credit and their situation and where they're going to progress the deal. I mean, at the end of the day, like we were discussing earlier, the generic process of the automotive industry is the customer walks in, you're meeting and greeting them, and the salesperson's first reaction is, let's just show them cars and get payments structured, and then worry about the trade in the interim. But the problem is, psychologically, when the customer finds out about the negative equity in a very rash way, they're really turned off. And you're going to tend to lose that customer simply based on not being able to counsel them properly in order to move forward, because you can solve negative equity by car selection. So as an example, we're going into 2026 models now. If somebody has negative equity upwards of $10,000, the last thing you want to show them is a 2017 model. It's never going to book with the lender. So that's why I feel F&Is are a very important part in terms of guiding a client down the right path and educating them properly, because they know what the lenders are looking for, they know the booking charts, and then they're going to have also an opportunity to counsel them in the sense of finding out what interest rate they're going to be at, you know, what payment they're currently paying today. If they're paying $250 biweekly, you know, and they want to be at the same payment with $10,000 worth of negative equity, you're not going to even get an opportunity to close that customer anyways. So why have a salesperson, and no offense to them, they're not qualified to have those discussions with the consumer as much as the person that's actually handling the credit process.
That makes sense. And for Wilson's, I know we were talking about, you guys have done a little bit of different structure in your team, I think, to support something very similar.
Yeah, and the thing is that the reality, we get our wholesale team involved very quickly, whether we're going to put it on our lot as a retail piece, we're going to wholesale it. So we have tools on our site which we use that helps get the customer realistic value on their car. Because without a realistic value, like, I think that's why we're seeing a decline in sales. Like I was telling somebody earlier that we're down about a third of our sales from last year, year over year. And I think it's because a lot of people, they just took the 96-month term back in 2021, 22, 23, when the prices were crazy high, and they weren't paying down enough of their equity. They were just making the regular payment. Now they've put $50,000 a year on it. The car it's been driven out, like it's almost done, and they're upside down $25,000. So to roll that into it, and I was telling somebody earlier that I think the reality is that a lot of people are going to have to wait for their mortgage to come due. And if they have room in that mortgage, they can roll that car loan into their mortgage, is what they're going to be doing. And I know it's not the best solution. It's a 25-year solution, but the reality is maybe they'll learn a lesson, they'll pay their car down faster. So we're helping to educate our customers before they come in the door, so we don't have to deal with this difficult discussion at the dealership.
And we try to help the customers have a better experience by, instead of the sales rep just selling them a car, they ask qualifying questions just to make sure that we're looking at the right inventory, getting a trade value early on. And we actually have a separate department. If they kind of sense out that they might be upside down, maybe have some credit bumps and bruises, they send them over to pre-approval so that we can chat with them, try to get an approval, and then kind of educate them before their heart is set on a vehicle that we can't get them approved on.
Makes sense.
I would just, I can talk loud.
They don't want to hear from you.
I would just say that, negative equity is not a new phenomena. It's not. We understand it. We know it. It's been around for a long time, and it's going to continue to be around. I would say that it's important that we start to recognize that the sheer amount of negative equity and this wave that's coming across from the last 5 years of paying too much for vehicles, it's coming due. And it's something that we need to be aware of. It's not all doom and gloom. Things are going to get better, but we do have an influx of negative equity, and we need to treat the deals differently than we once did.
And kind of moving right from the negative equity and the trade hurdle into the credit, and they kind of are paired, they go hand in hand really. How are you guys handling the credit scenarios now, which a lot of the times due to the negative equity or due to that customer's unique credit profile, you do have to switch them on what the original vehicle was that they came in on, right? So the vehicle that they originated and came in off of doesn't end up being the vehicle that they drive off the lot with. How are you guys handling that at Wilson's?
Well, that's a great question. I mean, we're trying to make sure that we take that first part away. We don't want them coming in on the wrong vehicle. We don't want our customers to be disappointed. When we can get in front of our customers earlier in the process and get them into our pre-approval department, they can structure the deal in a way that is, it's good for the customer, it's good for our partners at the financing companies, and quite frankly, we hate having our customers come in all excited about a car and then, sorry, you can't have that vehicle. Right. So if we can start the process earlier on with our clients, we're better off for it.
I think it's also important to figure out what the customer's goal is when they're coming in. Some customers are looking to get into a car that's more reliable. They might be in a car that started to have some repair issues and they don't have a warranty, so they're spending money out of pocket. Other customers are looking to get into something that's more fuel efficient, or others are looking to pay less. So if you just figure out what their goal is, then you can look at getting a car that matches that goal.
And Tony, you had talked about getting that finance involved early. Is that something that you do with every customer?
Every single one. So our process is pretty simple. Customer walks in the showroom. The salespeople are trained to meet and greet the customer, but also find out how they're going to actually transact the vehicle process or the vehicle purchase. If it's a finance deal, they're taking advantage of a pre-approval process. And the reason why is, like I said before, we like our F&Is to take control of that deal earlier on than later, because like you said, we're trying to avoid that psychological trauma that they might encounter. I mean, new car franchises probably see it all the time where, you go in, you're buying a brand new Hyundai, an Elantra, let's just say as an example, and the customer says, well, you don't qualify, maybe we'll put you in an accent, or your payment that you've spent 3 hours negotiating at $200 a month is now going to be $425 because your interest rate's going to be 23%. Psychologically, the customer, out of pride, is not going to just lay down and take that car. They're going to be like, well, there's got to be a better option. And it's because we're doing things so archaic that it's leading to that. I really firmly believe that we need to really harness the relationship with our clients and really understand their pain points. Because if you harness it, one, you're building a lot more of a better relationship, you're building rapport with your clientele, and you're actually giving them something that is achievable, and also you're protecting your future as a dealer because you can set the stage not only for the car today, but their car for the future, i.e., this 96-month loan, I've been in the industry, I was a finance manager for over 25 years. I might have done 5 deals in my career that was over 96 months because I knew I will never see that customer again. And I've told customers, I mean, if I put you on a 96-month term, I might as well hand you a shovel because I've buried you. I am not doing you guys a service by doing 96 months. It might help put a car over the curb, but that's acting in a mentality of today, not acting for the future. And if you're in this business for a future, you got to harness the clients and keep them. We spend a lot of money marketing to bring customers through the door every single day. We need to harness that. That's our cost of acquisition that'll go immediately down if they buy 1, 2, 3, and then refer family members and friends, because there's a trust factor. And that's why I think as an F&I guy, in my experience, I have a lot of clients that came back to me simply based on the straight goods, period.
And I'd like to add to that, I think that's the whole reason why we like to take that out of the salesman's wheelhouse, because the problem is when a customer comes in and they see that beautiful brand new truck in the parking lot or a near new vehicle and they fall in love with it and they think they can afford it, they think they can buy it, and next thing you know, the customer comes into the finance office and there is no way they can afford that payment. They just can't. So by setting the finance up first and making the customer realize what they can actually afford or acquire, it sets the stage, because afterwards they hate you. They're upset with you because you set them up to fail. You're better to set the expectation that really they should be driving a Hyundai Elantra and not that Chevy truck they would really like, or that Ford. Just set the expectation. I think that's why it's so important they go through pre-approval first, and that way you're looking at their credit score first.
And that's a very awkward and uncomfortable conversation that the finance manager has to have.
Yeah.
If they're not trained properly, what will happen a lot of the times I've seen is they'll just send the customer home because they don't want to say it to their face. And they'll say, we'll give you a call, even though they're looking at the screen and they're looking at the sea of red. And they say, well, look, we'll give you a call when you get home, because I don't want to have this conversation right now. And my question is, in your operations, do you provide any training to those finance managers on how to handle those awkward conversations?
Oh, absolutely. We're always dealing with that, talking to them. But that's what we want to try and avoid, and that's why it's so crucial that you have a pre-approval department or a tool on your site that will help the customer maybe adjust their sites a little bit to realize they can't afford that $1,300 a month payment. Really they want to spend only $750, and what can we get them into for $750? It just avoids a whole lot of hassle, upset, discouragement. It really sets the stage properly for our customers.
I think there's also different ways to say the same thing to a customer, If you come across that you actually care and you're trying to help them in their situation, you want them to get in a new car, but it just might not be the right time or might not be the right car they're looking at, you can be a lot more successful.
So we train every department at every level on conversational sales. It's very, very important to have honest and transparent conversations, being direct without being too direct, making sure that you're using empathy without over-explaining. It's very, very important that we have these honest, again, and transparent conversations.
That word empathy is an amazing word, because in my career, it's really nice, and I told you this earlier as well, when you have a customer that comes in the office and unfortunately they're at 30% interest or 27% interest, you have to put yourself in their shoes for a second. I think customers should be treated the same, whether they're at 0% or 27%. They're human just like us. Nobody knows what their past is, but if you actually take the time to get to know these people and really feel the pain that they're going through, you naturally build a relationship with them, and that trust goes hand in hand. I mean, at the end of the day, I walk into a grocery store and run into a customer that I've known for 12 years, and they started off at 30% or 27%, and I've counseled them. I've got them out of their loan 18 months later. Now they're at 11.99, and then a few years later again, trade them out of it. Now they're at 6.99, and they're like, everything you told me along the journey, I did, and I thank you for it. Well, that to me is worth more than any compensation you get for doing the deals, is that you made a difference in somebody's life. And I think the world would be a better place if we all just kind of banded together and had that same kind of mentality.
And that's the thing, is we might not be selling as many cars right now as we sold a year ago, but the reality is that we need to be in a position where we're actually helping our customers, not handing them the shovel, as you say, because we don't want to bury them. We don't want to do that. So I'd sooner sell less cars, optimize the deals in a way that benefits us, but also benefits them, protects them in case of that terrible thing like an accident or a car being stolen, the gap insurance, like making sure they're being looked after. Because without that aspect of it, like the empathy that we talk about here, we're not going to be getting these customers back in 3 or 4 or 5 years. They're not going to come back. They're not going to send their kids back. They're not going to send their friend back because we messed them over. So we need to be very careful over the next little while in what we do with our customers. So we'll take the less sales for the next little bit and help our customers.
I say there's 3 key components to a sale. You've got the customer, you've got the car, and you've got the lender if it's a finance deal. Have you guys changed the way right now with the tightness in credit and the increase in negative equity? Have you changed the ways that you're working with your lender partners? Let me start with Jessie or Andy.
Yeah, I think we're being strategic in where we send the deals to. You know, you don't want to just send it off to 5, 10 places without putting an ounce of thought into it. We know which lender partners are better with negative equity. We know which lender partners are a little bit more willing to take the customers that's kind of on the edge of prime and non-prime, you know, had a couple bumps and bruises, maybe some outstanding debt, but still making payments. You just have to be thoughtful in the way you send things. And don't overload it with backend on the first submission. Don't ask for that 84-month term. You know, just send it off in a reasonable way, see if we can get the green light, and then we work from there.
So all of us as dealers are under a lot of pressure in the sense of lenders in general. I mean, the lenders are all getting, like, when we sell less cars, that means the banks get less market share. There's a lot of lenders in the industry right now, whether it's prime or subprime. What I've noticed is we get pressures as dealers to maintain market share with lenders in general, whether it's TD, whether it's Scotia, whether it's RBC. Everybody wants their piece of the pie. Even though, to your point, you know, some lenders are better at others, we are forced to send sometimes business to lenders that are not necessarily ideal in that situation just to appease the market share of the pressures that we're getting from these banks. So I think as a whole in the industry, we're all hurting, you know, from the people on the ground, which is the dealers, to the lenders in general. I mean, everybody wants their piece of the pie. Unfortunately, we're under a lot of pressure in the sense of we can't get enough cars right now to satisfy the demand, and that's probably for another topic, but or if we're brushing up on car buying, because I do that too. But yeah, like the lenders, I feel bad for you, but end of the day, we're doing our best to satisfy everybody. And it's hard when they come in your office every day and say, like, why are you not sending us business? Well, we need business to send you. You know, the days of you know, having 600, what we had in stock, and you guys having 1,000, yeah. I mean, if you build it, they will come. So when we are running at, you know, 300 in stock, and I think you guys are running about
550, 600. We're kind of floating in there.
I mean, your business is down.
Right.
You know, everybody's
Absolutely.
business is down. So, I mean, the new cars had a heyday in the last 4 years, but now they're starting to see. I personally think the used car business is going to be a real big 180. I think the used car business is going to flourish like no other, and I'm just waiting for the time. So, to your points, guys, when you say, you know, let's be patient, it's coming back, I completely agree with you.
Yeah, and it's nice to hear you speak like that too, because, I mean, we're in this together. The thing is that in 2 or 3 years from now, this will recover, hopefully. You know, there's a lot of talk in the world right now with the tariffs going on, and, you know, a lot of people are worried about that. There's wars going on in the world, and I think people are just a little bit cautious, plus the unemployment rate's gone up. I was at another seminar this morning, and they were talking about the unemployment rates are at an all-time high in Canada the last little while, so, you know, we've got a few challenges against us, and we will keep selling cars because, face it, we need cars to get around. People need cars, and they might have to adjust their sights on what they can actually qualify to buy. Maybe they bought a Honda CR-V last time 5 years ago, paid the moon for it. This time, they're going to have to adjust what they get, or maybe they're going to have to repair that Honda CR-V or the Pilot and keep it going. But it's still, we're going to work with them, work with our customers.
Can you guys think of, can you share a story? I'm going to put you on the spot a little bit. And if you can't, you can't. But can you think of a deal that seemed impossible to do and that your team overcame it and got the deal done?
Well, let's
Every
see.
day.
Two
Are you gonna share?
2 days ago, 2 days ago, we had a nice lady come into the dealership, and she was thinking her trade was worth, or that she owed $10,000 on her trade. Well, we asked questions. Again, conversational sales, it lends itself well. You ask the right questions, you get the desired result and answer. And she said, oh, I owe $10,000 on my trade. Well, we were offering 9. And when we went and pulled the lien, it was $22,000. So just a little bit offside, just a tad bit. You know, we never want to put anybody in a bad position. But the upside to getting her into another vehicle was that she wasn't going to have to spend $2,600 fixing the problem with her existing vehicle. So we ended up putting the deal together. It wasn't easy, but it was an all hands on deck. We bent a little bit, she bent a little bit, and we were able to put the deal together. But it's a tough conversation when a customer thinks they owe $10,000 and they owe $22,000. This is more common. It's happening. It's happening in waves now, and we're going to see more and more and more of it. But putting these deals together is satisfying, and getting people out of tough situations is just as satisfying.
When you read the headlines and when you attend conferences, it's easy to get caught up in all the new technology and to almost get this perception that cars are being sold automatically. And the reason why I asked for the story is because what we see, and we're a tech company, but this is how cars are still being sold today. And it's important that everybody knows that because the perfect sale is the rare sale, right? The customer knows exactly what they want to pay, great credit, auto approved, no trade, or trade's got positive equity. Those are rare. And a lot of this technology we see is kind of designed for that. When you look at a Tesla, for example, model, it's kind of designed for that scenario. It's not designed for that scenario, but that happens every single day. Are you guys adopting any technology or software that helps support this new model?
We actually are adapting a software. I was lucky enough to be on a board to beta test a software called Matchbook. So 25 years in the business, like I said to you, customer comes in my office, I have negative equity, how do I structure it? I got 500 cars in stock, which car is going to work, which is not, do I plug in a VIN number, do I put it into the bank, is this one offside, is this going to book, is this not going to book? Over the years, I've managed to figure out what cars are going to book. I mean, 2 model years, under, around 50K, 9 times out of 10 it's going to work. But now with technology, specifically this software Matchbook, it basically solves your problem all at once. So customer comes in and you input all the parameters that you need to put in, and it automatically scrubs your whole inventory, and it basically tells you 2 things: which ones are going to book, and actually how much profit you're going to be able to make on that unit from one unit to the next, which saves a lot of time. I mean, with 4 locations across Ontario, I'm onboarding finance managers all the time. Unfortunately, I can't be there physically to teach them the craft that I've learned over the years. So this software, Andrew, to be honest with you, it's really changing in the industry. And it's
I was
really
going to say,
cool.
Tony, I appreciate the plug. But I was, like, generally speaking, the software. Don't have to say the name.
Oh, I'm sorry.
There's no sales pitches here.
Okay.
But what is the software doing? Not necessarily what the software is. So it sounds like you're talking about software that enables you to, scrub the inventory and like look at what vehicles we'll book out for, and that's been really helpful.
Exactly. 100%.
And at Wilson's, I know you guys are always trying new cutting edge stuff.
Absolutely. It's funny, I've been in the business for 41 years now. Started as a child detailing cars. Tony's been 25 years. You're looking at over 100 years worth history here between the four of us here on the stage, which sounds ridiculous, but like if you're not learning something every day, like I go to work and I'm open to new ideas. So if they pitch an idea to me, I'll say that sounds amazing, that's going to work. Let's adopt it. So I assign somebody. That's why I have my entourage here, because when I get an idea pitched to me and I like it, Mr. Wilson taught me very well. He was always an early adopter in everything. So if there's something that you can use as a tool to help you in your business, take it.
Yeah, and I think that's the thing. We've tried lots of different trade tools to give like a idea to the customers what their trade is worth. And you know, some of them lowball, some of them give too high of an expectation. We've tried a bunch of different ones, and we've kind of settled on one that we think gives a pretty good idea to the customer to get them in the door, but not set them up for disappointment when they get in. And also credit education tools. You know, sometimes customers think that their credit is really bad, but it's not so bad. Or sometimes they think it's amazing, and turns out they have too much debt. Their score is actually really low. So just having those tools on your website so customers can kind of educate themselves a bit before they come in definitely helps the process once they're live in person.
Andy, do you find these tools, you guys have talked a lot about the tools on the website because we all recognize that that's where most of these consumers start and they're coming in from. Andy, and then I'll go to Tony. Have you guys taken any of these online tools, processes and philosophies, but implemented them in store?
Well, I think it's important that if you're going to use the online tools properly, you need to be optimized first. So your SEOs need to be on point. With the negative equity being a big part of this topic, obviously, it's important that you optimize your website, and these customers that are coming in a negative space, a negative equity, they have a soft place to land on your website. When you're partnering with these widgets that we use, the trade widgets with the lead generators and the credit applications, they're all very, very helpful tools. We use them every single day, but I would caution everyone in the room to make sure that they're partnering with a company that understands their business, that has done their research about you, and they don't throw a cookie cutter program at you to say, here you go, operate your business within these parameters. It's so very important that the companies that you partner with are on your side and will pivot and move with your business model.
Nothing else to say, Andy took it away there. I wanted to say, I'm training for an amateur boxing event, and I got to cut some weight. I'll tell you, with these lights, I think I've lost 10 pounds standing here. I wanted to say, I don't think anyone here is nervous, but we're all sweating because of the lights. Look, if there's a question for whoever wants to answer it. If this credit and trade problem keeps going and doesn't change and doesn't get better anytime soon, for the dealers in the room, guys, what's one thing that every dealer should do to keep selling cars and making money?
All in the buying.
Sorry, Tony,
It's all in the car buying. We have to get a little more tighter on car buying. Unfortunately, with the U.S. Coming here and driving our prices up, it really makes it difficult for us as Canadians to be able to get quality cars at a reasonable price. You cannot compete with somebody who's playing at $1.37 on the dollar when they're going across the border and they're still winning. They're the ones that are driving our traffic. I mean, I've said this many times again. Our government really should be stepping in and putting some sort of stop to that, because supply and demand is a major issue. And I'm at the auction 4 times a week, and I see it every time. Like I know the buyers that are there, and I know what they're buying it for. I can see their trends. I see Mark Wilson's from time to time.
I don't know what you're talking about.
But yeah, it's all about the car buying. I think that's the one way that we can control, because let's face it, the process that we've all talked about is never going to change.
No.
It won't change. I mean, the banks have to reduce 96 months. Everybody's going to try to do their part. But if we're paying absorbent amount of money on the car, it's going, like, the only person that's actually getting affected is the end user, and that's the client.
Right.
It's not us. I mean, we still need to make a profit. We still need to
we're
turn
not
the
a charity.
lights on.
We need to. That's exactly. We need to make money to keep the lights on, keep our employees coming to work. And without that, so like to your point too, is that we're buying more cars. All of my radio ads, We buy cars, like people are dropping cars off to us, they bring them right to the front door. There's no auction fees, there's no transportation fees. You're appraising that car right then and there. They're the best buys, and they sell the fastest, and they have the most profit in them because you bought it right. So to Tony's point, that helps us buying cars. So every video ad I do and every radio ad I do, we buy cars. So bring your car to us, we'll buy it. Those are the best ones. That's keeping them in Canada. Nobody knows how much we paid because they can't search the data on the website on ADESA or Open Lane to see what we paid. So they are the best buys.
And let's face it, these are cars that we're buying from consumers that we will never get a chance to buy at the auction.
That's right.
So consumer acquisition.
You know, like any of you dealers here, you get a quality trade. The last thing you're going to want to do is put it at the auction. So let's face it, these are quality cars that are unique that nobody else has.
That's right.
Thank you very much, guys, for all your time. Give these guys a round of applause, please.
Better leads, less fraud, more deals. Autocorp.ai.